Hello everyone, welcome to my presentation. Today I will present from the Financial Management course, which course code is OSBBA 2302. Today I will discuss from Unit 1, that is introductory part. So my discussion topic will be concept and scope of finance. So what will be our learning objectives? At the end of the lesson, you will be able to state the definition of finance and you can describe the scope of finance. Now, we will learn what is finance. In simple terms, the raising and using of funds for any purpose is known as finance. Finance is a function of business. In business, there are short-term goal and long-term goal. Short-term goal is profit maximization and long-term goal is wealth maximization. So, the raising and using of funds for profit maximization and wealth maximization is known as finance. If we define finance as a broader perspective, we can say that finance is an applied economics which ensure the best utilization of economic resources, especially capital, by maintaining the interest of all stakeholders. Now you need to know what are the economic resources are. In any country there are 4 types of economic resources that are available, that are land, labor, organization and capital. Now you need to know who are the stakeholders are. The stakeholders of a business are customers, suppliers, employers, employees, government, etc. Now we will learn the scope of finance. There is a misconception that everyone understands finance as a financing activities. No, financing is not all about financing. It's all about investment, financing and dividend decision. It includes these 3 decisions. In investment decision, financial manager have to consider where he will invest, whether he will invest in short-term asset or whether he will invest in long-term asset. If financial manager invest in short-term asset, we can call it working capital management, and if financial manager invest in long-term asset, we can call it capital budgeting. In investment decision, financial manager have to consider that he should invest those sources which gives him the maximum return or maximum profit. In case of financing decision, he has 2 options. He can go for debt financing or he can go for equity financing. In both type of financing, the financial manager have to consider that he should raise and collect fund which gives him a cheapest source. So in financing decision, you have to collect and raise fund from the cheapest source or minimum cost. And the third decision that financial manager takes are dividend decision. In that case, financial manager have to consider how much dividend he will pay to the shareholders as a dividend from the profit, and he have to consider how much profit he will retain for further business expansion. So in dividend decision, how much money that is paid to the shareholders from profit is known as dividend payout ratio, and in retention ratio, the profit that is retained for further business expansion is known as retention ratio. If we summarize or recap today's discussion, we can state that finance, the definition of finance in simple term and the definition of finance in broader term, and the scope of finance where financing involves investment, financing and dividend decision. I think this discussion is helpful to you and it will be enriches your knowledge and it will be fruitful to your learning process. Thank you.